With regards to a company, any sort of corporate, in terms of their liability, as mentioned earlier, this quite often arises from either non-filings or incorrect filings, or alternatively, intentional nil filings, or filings where a liability arises, but the entity does not have the liquid cash on hand to actually settle that liability with SARS. That being said, there are numerous compliance issues which must be dealt with prior to engaging SARS on any sort of tax debt settlement, deferred payment plan, or whatever the case may be. And that would very much be the compliance in terms of submission of the outstanding returns. Alternatively, any other registration-related non-compliance, such as the submission of verification documents, the completion of a verification and audit, whatever the case may be. But it is very important to note that SARS cannot be engaged on resolving a tax debt, so to speak, while an ongoing dispute, audit, or verification is in progress. Nor can SARS be engaged in the event that there is historic non-compliance in terms of registration, filing of tax returns, or any other compliance aspect related to the respective taxpayer. With regards to this, before we move on to the tax debt relief mechanisms, it's important to note that with regards to any tax debt, there is a period that SARS permits payment, and it's typically 30 days from the assessment being raised. Subsequent to those 30 days lapsing, what will typically happen is SARS will send out a final demand, which then permits the taxpayer 10 business days in which to submit a response. This response can take numerous forms, and it can be an engagement with SARS in terms of a settlement, which is a compromise of tax debt, a deferred payment arrangement, whereby the taxpayer takes a liability of, call it 1.2 million, and offers SARS 100,000 per month for the next year in order to settle that liability. And the third is the suspension of payment application. And this is sometimes necessary dependent on the circumstances and is typically used in the dispute process. So should the taxpayer be disputing the purported liability of 1.2 million, they would then need to go the suspension and objection route. With regards to SARS's collection measures, what we have seen, and I'm sure what the vast majority of yourselves have seen, especially over the last 2 years, is SARS has greatly upped its collection powers. And what we've seen is demands going out from anything to 5,000 Rand outstanding up until 28 million was the last one I saw about 2 weeks ago. And it's very important to note that regardless of whether it's a whale, so to speak, or if it is a sardine, SARS has cast their net as wide as possible and pushing that message of compliance, be it voluntary compliance by virtue of the voluntary disclosure program, or forced compliance by SARS commencing with collection measures such as third-party appointments, whereby they would directly attach the funds from a taxpayer's bank account. These collection measures are being enforced, and it is the duty of accountants such as yourselves, tax attorneys such as myself and my team, and tax practitioners to actually make sure that these taxpayers and our clients remain compliant in the face of SARS. And if they're not compliant, to remedy that non-compliance as soon as is reasonably possible, as it does often have long-lasting effects.